Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is some early morning trading. Today, we're going to cover just a whole slew of economic events. We've had a couple that have just come across the news wires here in the last few minutes. We've got some orb setups here on the US 30, the US 500 I'd like to go over, and then we've also got to recap that Australian dollar, what happened during the overnight. Down under, the RBA decided to hold interest rates static, citing some real challenges headed their way in the mortgage markets. We'll talk about that in just a second. There's a lot to that. Also, we got a pullback in silver. I think we may have a Fibonacci to hit there. We've also got a 4-hour 920 crossover that's in play on that Aussie. We're going to go ahead and break that down as well. And, of course, we've got to look at the gold market. Always got to look at gold, and then we'll break down some of the US 30 action, some of the Dow Jones Industrial analysis that we put out in that Switch Markets market analysis video this week. Go over maybe one of those ideas or so. And then also I'll cover any other markets that you want to look at. So I'm very, very easy to work with this morning. There's a lot going on right now, but really sort of a static open. I mean, I'm not really impressed at all with the price action that we've seen over the past week or so, at least in the U.S. equities indices. Very, very choppy. We're not getting those big breakout trend days. So is it the right time to be playing the orb? I think we might be able to get a decent orb trade today. And we're going to go ahead and break one down for the US 30 and the US 500. I do believe that we'll at least have a trade idea or probably a trade entry here in the next 15 minutes or so. So we're definitely interested in that. So good to see everybody back in the room. Always a pleasure, guys. Andrea Garwell, good to see you, Andrea. Welcome. JC, good to see you, JC. And Bobby Bob. All right, guys, I know our time's a little bit different today. We've got some other things to take care of a little bit later, but we're going early. We're still got our eyes out for that NFP. Remember, NFP is the big market driver this week. It's on Friday. We don't know if we're going to have it just yet. I've seen pretty much everybody says we're going to get a government shutdown. I don't know if that's going to be the case. We'll be watching that news cycle relatively closely here over the next 36 hours or so. Lita, good to see you, Lita. Welcome. All right, guys, let's get right out to price action here. Now, the opening range breakout's one of our more popular strategies that we put out on our How to Trade YouTube channel. And it's sort of one of those that a lot of people love because it gives you a trade pretty much every single day. I like that as well. It always helps to be able to know before you show up that you're going to get a trade set up. You know with the orb that you're going to get a trade set up. So this is interesting right here. A 15-minute orb right here on the US 30. You take a good look at your opening 15 minutes right there after the opening bell, the second 15 minutes, and now we sort of peaked above that range and we're pulling back down into this opening range. So I feel pretty good about the way that this is setting up. This isn't really a huge elongated orb. We've still got a lot of room to work. One of the biggest things about the orb strategy that you need to know is how to set your profit targets and stop losses. We don't have an entry just yet. Remember, we're waiting for a bar close outside of our orb, either to the top side, that would be a buy, or to the downside, that would be a sell. But what we can do right away is identify our key levels. So for our key levels, if we're interested in potentially looking at what would be yesterday's high, something like that, that could be a potential profit target there. And then also you've got yesterday's low somewhere down in there. You've also got some overnight highs and overnight lows. You'll notice that we're sort of trading above that area right there, which would probably be your overnight high. So we're sort of making new highs. Interesting. Do we get a breakout and a run, maybe up to 482? That would be the way that I would want to trade this. I would be sort of a bullish bias just because we're in that rate cut cycle. There's a lot going on. But right now, guys, you're seeing incredibly rotational markets. That can be really trouble for the orb. So we're watching closely, but realistically, those are probably going to be some decent levels that you could shoot for, and those are just yesterday's highs and lows. As far as the US 500 goes, this is a little more definitive. You're seeing a break here. Nice tight orb. I love that kind of orb formation. Really, it is just a hammer and another hammer, and now you're looking at maybe getting a break and a close outside of that range. That will give us a chance potentially to trade. Once again, we're starting looking for our key levels right here. That would be probably yesterday. That was during the overnight. So that would be your overnight high. That's not really enough money to shoot for. We've got to shoot for something else, and you got to be probably looking up at yesterday, somewhere up there right around yesterday's high. So that would be my top side target if I was looking to trade an orb. Now, we can certainly bring this down and make it a function like a 1-to-1 or something like that with our stop loss right beneath the range. But in the next 10 minutes or so, if we do get that trade, I'll line it up and we'll execute it, and we'll draw it up for you in real time. So good to see everybody. Brian Laurel back in action. Good to see you, Brian. Welcome. Blue Mango, good day. Shane, I hope you're well. I'm doing fantastic. A little bit earlier than normal. Typically, I'm probably up. I'm on the computers trading right now, but that's okay. We got no problem going a little bit earlier today. Universal, always a pleasure. Universal, Lewis Shepard, good to see you, Lewis. Any questions that you may have, any markets that you'd like to look at, be sure just to shout out and throw it in the live chat, either in the How to Trade trading room or on YouTube. All right, welcome to the Switch Markets community. You guys know the drill by now. If you want to trade anything that you see on this live stream or anything that you want to trade on your own, just head on over to Switch Markets. They'll get you up and running in just a few minutes. Remember that reverse KYC program, up to $2,500. You can be trading immediately without having to go through the Know Your Customer process. Interesting stuff, guys. Be sure to check that out over at Switch. It's award time. We've got the awards. I'll be running these for a few more days. Best MT5 broker, best trading experience, and also the best partnership program. Interesting stuff, guys. If you're interested in probably a brokerage that is sort of an up-and-comer, Switch Markets, go ahead and take a look at it. All right, trade update. Inflation, 25,000 is in play for the U.S. 100. Right now, we're trading right around 24,555. This trade's probably not going to come into play today, but our entry's somewhere right around 24.925 to the short. Beware of that. Be ready for that trade idea. That one could be coming our way really anytime. I expect it to hit this week. I think that we're going to get some good price action to the top side on these markets ahead of NFP if we have NFP. Uncertainty is tough to deal with, guys. We just don't know really what to do with that jobs number just yet, especially if the entire release is canceled. So more to come. That's about all I can say. As far as our gold trade, metals breakout, 4,000 coming up for gold. We're looking at the 4,000 level. A bit of a pullback here in gold, but not really. The big pullbacks in silver. We want to buy a pullback there. We're going to look at that in just a second. But as far as gold goes, 38. We're trading about 38, 32, about flat on the day. So it's not really a pullback day for gold. I think we go to 4,000. I really do. If we don't get it right away, we just got to be patient and go ahead and stick with it. Let me see. Sabir, sir, I want to ask, is the volatility delay or what? No, the volatility is definitely we're watching these markets in real time. As far as delayed on the news events that are coming out today, no, we saw a little bit of spike of volatility. I'm going to go over those in just a second. We had a few that just dropped about 10 minutes ago or so. So I wouldn't say that it's delayed. As far as the volatility, is today a volatile day? No. Not in your U.S. indices. It's not. Thus far, we haven't got a break, but that really sets up our orb, our opening range breakouts. Remember, when we play an orb, we want that break to come into the middle of the session or late session. We don't want to see that break right off the bat, because if the break comes right after the opening bell, it means our range is going to be too big to play efficiently. So I like the way this day is setting up. As far as where's the big volatility, we've got some movement in natural gas, a little bit of compression right around 3. We've also got some action here in the Forex, but just not really what I'm looking for as far as taking huge trend trades. There's one trend trade on the board, and I would say that that's going to be the Australian dollar, US dollar. It also looks like last week with our US dollar, Japanese yen 920 crossover that we got out in just the right time, because that market is absolutely reversed, and we're not going to listen, man, when you get a chance to get that money, you got to take that money sometimes, and we did that, so that was good. All right, guys, let's go ahead and get on over to the Australian dollar here. Now, this really was the big sort of mover and shaker during the overnight. A lot going on there with the Aussie. Basically, the RBA decided to come out and hold rates static. You can see right here, the Reserve Bank of Australia held rates at 3.6%. That's a big deal, and it's a big deal because it essentially is a bit hawkish here for the Aussie. Now, the RBA makes a late interest rate decision. Our latest interest rate decision. This was interesting because mortgage holders and brokers will feel the ripple effects. There's a lot of variable rate mortgages in Australia. Now, there's a lot of them in the United States, and there's a lot of them everywhere. And what a variable rate mortgage is, if you don't know, is it's something where you get into it at a certain rate, and then as the prime rate evolves, the mortgage is absolutely discounted or it's raised. Now, typically what we like to see here is if you get into an ARM, that's called an adjustable rate mortgage, an ARM, let's say you're going a 5-in-1 ARM or a 3-in-1 ARM or maybe a 7-in-1, that means that the duration, like let's go a 3-year ARM, 3 years, then they start adjusting the rate, a 5-year ARM, then they start adjusting the rate, a 7-year, then they start adjusting the rate according to the prime. Now, the reason why you would be in an ARM, an adjustable rate mortgage, is because they're cheaper, number one. They can be cheaper, and they're not necessarily easier to get into, but they do offer you some benefits up front. And the idea is that if the interest rates go against you, then you can go in and refinance, pay the fee, whatever it is, $3,500, I think, is pretty much what it is now. It's a percentage of your mortgage, but let's say you're in for $400,000 or $500,000, you're probably looking at about $3,500 to refi, something like that. I'm not current on that, so if we have real estate professionals out there, don't take me to task on that. But this is a big deal because what happens is when those interest rates stay higher and people are in an adjustable rate mortgage, and let's say they don't want to refi or they can't refi, then you're going to be in a position where those mortgage payments, they jump dramatically, and that puts pressure on the homeowner, and it raises your defaults, your defaults on your mortgages. So we saw a lot of this in 2008, 2009, 10, 11, 12. The adjustable rate stuff really was a challenge to deal with, and it turned over a great portion of the United States real estate market. Now, that's what's happening in Australia right now. There's a tremendous amount of those adjustable rate mortgages out there. And from everything I read, it's very, very difficult to sort of handicap where the broader Australian economy is going. Now, I don't live there. Well, I know some people down there, and they aren't really too keen on these higher interest rates. Now, here's basically from the horse's mouth. There are uncertainties about the outlook for domestic economic activity and inflation stemming from both domestic and international developments, the RBA said in a statement. On the domestic side, stronger than expected data on growth and inflation indicates that households may become more comfortable consuming as real incomes and wealth rise. Okay, so what does that mean? It means inflation is a concern. Uncertainty in the global economy remains elevated. That's tariffs. That's what all central bankers are saying. They're passing the buck right now. But this is interesting. RBA Governor Michelle Bullock has made it clear that the central bank's board remains cautious about further rate cuts, citing ongoing domestic and global economic uncertainty, reiterated the need for inflation to stabilize. So what do we have here? We have a hawkish stance. Basically, the RBA said we're not going to cut interest rates, even though they would really help out homeowners and probably kickstart our economic prowess a little bit. And what did you have? You have a bullish reaction here out of the Australian dollar against the USD. It was a very hawkish meeting. So right now you're up about 0.75%, 0.66, 0.2%, I guess that's better. So on the daily, we've got our 920 EMA crossover strategy. If you haven't seen the video, How to Trade Calm YouTube channel, go over there, check it out, get you up and running with the 920. This is our coded strategy where we know that the gold bars mean buy, the purple bars mean sell. We've had a lot of luck with this strategy. There's no doubt about it. This is quickly becoming one of my favorites for position trading and swing trading. Last week we did a workshop on this, using this strategy to swing trade. Go back and check it out if you missed it. It really was a pretty darn good one. A lot of folks watched it, and I was really happy with the turnout. But as far as what we have going here, well, we've got a daily chart. We looked at potentially getting that 9 to cross under that 20 EMA. That was going to be a sell signal, and you can see this bullish break sort of held us off of that. So if we're looking for a buy signal potentially now, hawkish RBA, that's going to be a bullish market driver for the Australian dollar. What could we do? We could dial out, we could dial down our time frame, and potentially look for a trade entry on our 920. It's that simple, guys. Right there, there's the big gold bar. The big gold bar would be your buy, and that was just shortly before you got involved with your RBA interest rate decision. So right there, there's your move, and then there's your rally. So the real question is, how would you execute this trade? A couple of ways. I mean, it's still not over, believe it or not. I mean, it isn't over yet. Your entry point could be right on that bar close, which is going to be somewhere right around 66. I love big round numbers. So if it's at 66, that's a bid that's probably worth having. As far as where would your stop loss and profit target be, a couple of ways to do it. You could play this game really tight, get that entry, and then just exit right down there somewhere around 65.73 and look to get, say, a 25 pip pop. That's not a bad trade. Or you could take a position, risk a little bit more, anticipate on being in this for a true swing trade, stop loss down about 65.17, and essentially you're risking about, 80 pips, something like that, 90 pips potentially to get the runner. I would say probably right up to this top of this market on the 17th of September, which is going to be right around 67. So if you want the big trade would be somewhere right in here. You could definitely take that long from that entry, and you could definitely put your stop loss down here and look to get that rally about 100 pips to win 100 pips. Nothing wrong with that. That's a true swing trade, or you could trade the scalp. Now, there's another way to get your entries. We made a video on this using Fibonacci retracements to get you in a potentially a better entry, a more valuable entry. I would work the spike to spike. I would be looking probably somewhere right down in here potentially. You can see right there, there's going to be sort of your most recent spike low to whatever swing high you had, and 38% is going to be right around 66. So that would follow the trend sort of, or you could wait for a deeper pullback back to these moving averages. It happens a lot. Typically, we see a pullback to these moving averages before we get the big move. This is fascinating stuff for me. I would be looking at the 66 area as probably being a pretty juicy buy. If you wanted to get in a little bit better, then you could wait for sort of this microwave. And it's not a very big wave, 66.23 to 65.71. It's a very small wave, but you'd be looking at the back end of that golden zone, maybe 65.90, 65.95 if you wanted to be extra frugal and patient. Nothing wrong with that at all. If you wanted to make that big position trade, though, that we're talking about, trying to get that big runner up to about 67. There's nothing wrong with that, and if you want to be very patient, you could just work right from that swing low to whatever high gets established and sort of look at your macro levels there. Maybe be patient, looking for a deeper pullback before trying to get with the broader trend. Is this market trending? I don't know that it's trending. On the 4-hour, we could say that it's trending higher. On the daily, we could say we sort of broke out. So Aussie's been in rotation for a while. Is this the catalyst that takes it out of sort of an extreme value area? Potentially, yeah. So interesting stuff, guys. I think that we got an opportunity here to trade on the Australian dollar, and the reason why is we had a big-time market driver that came across the board. All right, we got a few other economic developments that we probably need to talk about, and if there's any questions at all on any market you would like to look at, be sure to drop that in the live chat. So for right this minute, we've got a couple of things that hit the board during the overnight. GDP for Great Britain, UK. The UK GDP came in at 0.3%. That was as expected. Year over year came in at 1.4%, which was above expectations, but down a little bit from the previous release. So nothing really too huge there. And then also German CPI came in. This is a preliminary figure. Came in at 0.2%, and that was as expected, above 0.1. Remember, Germany's sort of that biggest economy in the EU. So when you look at Germany's CPI, you have to think, okay, will that inflation impact the euro? And the answer is yes. Yes, it does. So we're going to look at the Great Britain pound and the euro. I think there's some decent trades there. I don't know if there's any great trades there, but we had some outlined yesterday that looked to be pretty good. So we're going to go ahead and pull those up now. If there's no objections, we can certainly do that. Let me see, JC, what are you using to get those gold bars? Well, we've got code. We've got it coded out. So basically what this is we built a coded strategy here on a video a while back, I don't know, 9 months ago or so, and it was the 920 EMA that's coded. And we coded it using ChatGPT, and then I took the code, Pine script code, and I put it into TradingView, and it sort of spit out these indicators. So that code, if you want that Pine script code, go to that video, the video on the How to Trade Com YouTube channel. It's coded, the coded 920 strategy. And then right there, you've got that opening comment that I have pinned. One of those replies right there near the top, I actually listed all the code. So just look for some of my replies on the YouTube thread, and it gives you that Pine script code. Go ahead, cut and paste that into your Pine script editor, and that will get you up and running with the code. And the gold bar is a buy, the purple bar is a sell. But what probably is the most important thing that nobody asks about is the shaded area between the 9 and the 20. This shaded area is absolutely a fantastic trend indicator. When that thing's wide, it means you're trending. When that thing is not wide, what does that mean? It means you have a compressed market. And you can see right here, this is really starting to stretch out a little bit. So we really like to see that, especially if we're on the long side of the market. That's for sure. Andy Tong, good to see you, Andy. Welcome. All right, guys, so let's go ahead and have a look at a couple of these markets here. Let's go ahead and start with the Great Britain pound USD coming off of that GDP release. As far as, what can we really expect from this pair? Well, I mean, we've got our macro level. This was a monthly. I'm not going to bore you with that again, but right around 130, 150 really is probably the bargain buy of the fall if we can get it on this pair. So we're watching that closely. If, in fact, the U.S. dollar does gain back some of its swagger, which I didn't believe last week's rally at all, didn't believe it at all. And we're being vindicated this week. Really, Friday bounced back, Monday bounced back, and now today we're moving higher. You can see right here on the daily chart, though, that 62% level at 134.50-ish, holding up very nicely. It was yesterday's high, but now it looks like we're going to go up and challenge that. If you do break above that, brings our next trade into play, which is beautiful, which is 134.90-ish. You've also got a 13-day EMA up there at 134.75. So this area, right between 134.75-ish, and also 135 probably. Fantastic topside resistance. You've got a Bollinger midpoint there, a daily Bollinger midpoint as well at 134.87. You've got a 78% Fibonacci at 134.90. I love 78%. My favorites are 38%, 62, and 78. I ignore 50, and I don't even put 21.8 on my charts. I don't even care about it. A lot of reasons for that. Maybe I'll tell the stories at some other time, but this trade right here could be very good for the Great Britain pound USD. So we're sort of fixated on that level right between 134.75 and 135. That's a fantastic zone. Maybe we can attack later this week or maybe even later today. If we do break above that 134.50 threshold, you can see the market really is getting compressed right around that golden zone. And if in fact we do get a break, we're probably going a little bit higher. That's good stuff. Can't wait. Absolutely excited about that. As far as what can we really expect out of the Euro USD? Well, it's a real similar type of a scenario. It's just not quite as, I don't know, good. How's that? It's not quite as good because we sort of broken above our moving average here, our 13-period moving average, our 13-day EMA, which is my personal favorite, and you break right up above there. We sort of failed at 62%. I still like that 117.82 level at 78%, but it's not as good because you don't have the converging indicators. So I would be more careful shorting this Euro USD. If you wanted to short right up here from 117.53, you probably could get away with it again. It's just not necessarily the best looking trade that I've ever seen. I like that Great Britain pound better. But if you do rotate up to the top side of this market, you could probably take a shot from 117, 79, something like that. You definitely want to beware, though. Beware. This is not the best market structure. It's not bad, but we're above the moving average. That's bullish. And then if we do take out the 62%, and you can see we're sort of getting saturated in this area, if we roll a little bit higher, I don't know that we stop dead in our tracks at 117.82, but you do have to respect 78. So if you were going to short up there, 117.79s, 25 pips, maybe looking for a conservative 24, 20 pips. Stop loss would be right up above 118 somewhere. If you wanted to play it, sort of according to Hoyle, meaning like a lot of Elliott Wave practitioners and Fibonacci traders would, you'd sell right there 117.79-ish and stop yourself out right up there at the top of the wave, which would be right up above 118.20. But then again, if you take that trade, you're going to need to get at least probably 40 to 50 pips on the back end. So you're going to have to trade down in here. I don't know that we do that. So I don't love this trade, but it's not necessarily the worst thing I've ever seen in the world. All right, we did have a few economic events here that were live just a few seconds ago. Let's cursor down. You see there's your RBA, there's your GDP. We've got all these things already highlighted. But what we do, sort of, I don't know that we overlooked it, but during the U.S. session, there's some news cycles where they drop news during the middle of the U.S. session. And when that happens, it really does screw up price action. Is it rare? It's not rare, but it does happen from time to time. So right here, you had a group of numbers that came out 9:45 Eastern and 10 a.m. Eastern. So that's sort of right after the U.S. Open. Now, typically you don't see that. And the reason why you don't see that is because those economic numbers really do skew participation. They skew volatility. So like a lot of times you'll see big economic announcements come after the market, or we release, our NFPs and our CPIs, all that stuff comes before the market opens. And that's absolutely imperative that we understand that, because when you start dropping economic information or economic data during the session, you have the potential for short-term volatility. That's one of the reasons why we saw that real choppy orb. We're going to get back to those orbs here in a second, but we saw the real choppy orbs that came on the 15-minute chart right at 10 a.m. Eastern. We saw the peak above and then the rotation down. A lot of it had to do with these numbers. Now, these numbers aren't huge market drivers. They're listed as 3-star events. I call them peripheral events, and the reason why is they're not huge. Nobody's going to sit around and bet the ranch on JOLTS job openings. You get a little participation. You get some algo traders in there, but it's not the biggest thing in the world. So let's not get carried away with these events, that's for sure. Let me see Tardis. Yo, good to see you. Universal, what about the sell at 38.62 supply hour one? XAU USD huge bolt. Yeah, I'm going to go ahead and get in to the gold here in a minute. We're going to look at silver and gold and our orbs. But yeah, the gold's interesting. I don't know about selling gold at all, but listen, if you have an approach, we're going to pull up your chart right here. Supply in H1, okay, so you're on the 1 hour chart. Imbalance 2 and last resistance before going in. Yeah, I mean, it could be. I don't mind. We'll run over that scenario here in a second, Universal, because it's a smart idea. It's not a bad one. You just have to watch your risk, and we'll show you how to do that here in a second. All right, Chicago PMI comes in. What is the Chicago PMI? It's just an academic number. Don't get carried away with it. I won't say that it means nothing, but it means nothing. 40.6, that was beneath expectations of 43.4 and beneath the previous release of 41.5. CB consumer confidence for September came in at 94.2. That was beneath expectations of 96 and beneath the previous release. Now, consumer confidence is a bit more important. We're still debating whether we're going into a recession or we're not going into a recession. The number one driver of recessions is what? Consumer confidence. When people stop spending money, the economy stops growing. And that's just the way that it is. So you need expenditures, especially in an economy like the United States, where it is a consumer-based economy. Some call it just a consumer I don't know, just a consumer sideshow, basically. You show up and people buy things, and when they buy things, people build things, and when people build things, the banks lend money, and you can see how the big cycle all leads to economic growth. Well, if you don't have consumer confidence and nobody's buying anything, then the prognosis gets really ugly really fast. So we're watching that closely. So consumer confidence has a little bit more weight than usual, but still, it's not a bad miss. It's not like it came in the 70s or anything. JOLTS job openings, that is really the theme for this week is employment. Remember, JOLTS job openings and tomorrow's ADP employment report, these aren't necessarily correlated with NFP. NFP and unemployment are the big numbers. So be ready for those numbers to drop if we get that report this week. We don't know yet. JOLTS job openings, 7.22 million. That was above expectation, 7.190 million, and right above the previous release of 7.20. So JOLTS job openings, typically the higher the number, that's going to be viewed as a sort of a positive thing because that means that there's more jobs needed, more growth. A lot of folks argue that JOLTS job openings is a negative market driver because the more openings there is, the more people that are getting fired. I don't know. Half glass empty, half glass full. Very difficult to sort of put our finger on exactly what these numbers mean because there isn't really any huge discrepancies between our expectations and the actual figures. Did any of this stuff impact our markets? Well, the timing of it did. There's no question about it. So the US 30 comes across the board. Here was our orb. We were set up beautifully with a 15-minute. What happened? 8 a.m. my time, 10 a.m. Eastern. Those numbers came out. Head fake to the top side rotation. We tested both sides of that range. Do we have a trade yet? No, we do not. Why do you think we got a crazy candle that traded both sides of the previous 15-minute chart? Because of the news events. Do the news events really mean anything in the scheme of things? No, I mean, they're good for economists and, writers, financial writers and reporters. They'll make a big deal out of it. I won't. I'm not going to sit here and lie to you and say that JOLTS job openings, that's going to be a big trend day down. That's not going to happen. But what did it do? 15-minute chart, you bet, created enough volatility potentially to shake you out of a long and shake you out of a short. That right there is what really tortures retail traders. It's like, okay, we've got our bullish run. Oh, no. Now we got a bearish run. Oh, no. Everybody gets chopped up. So that's why we have our filters in. We have to have a bar close outside of the orb or we can't trade. Let's look at our US 500 orb. Same basic thing. I like this orb. Very tight, head fake to the top side, rotation back down into our range. Very, very flat market, very flat market. So if you're anticipating a break in this market, we haven't got it yet. If you're an orb trader, maybe a late day range trader or a breakout trader, this pretty much is what you want to see. You don't want to see that market trend right away and eat up all your points. Now you're just waiting for the market to close outside of your orb and you take the trade. That's all there is to it. Or your orb, your OR, your opening range. But you can see that those news events, even though they're not huge deals, they do influence things. Short-term price action was definitely influenced by that, no question about it. Okay, let's go ahead and get over to silver now. This is sort of the analysis that we put out in the Switch Markets Market Analytics video earlier. I guess that dropped about 4 or 5 hours ago. If you haven't seen it, I'll post it here in the How to Trade Trading Room. And then also it's on the Switch Markets YouTube channel. Go over there and check that out if you want to see it. I break down the silver market for you, the key levels. The key levels are 50. All-time high is 49.81. Be careful up here. We talked about it yesterday. I mean, typically I would tell you to step up and short. Consider taking a short in front of 50. That's what I would do. I'm not so sure on this one. And the reason why is that all-time high is at 49.81. That could get washed out. That 49.81 could get washed out, and that momentum could drive us up over 50 significantly. I'm going to wait. I'm going to wait for some confirmation up around 50 before taking this short, just because of the convergence between the all-time high and the key level. That could almost produce a breakout on its own. So we got to watch that relatively closely. Now, you can see since the breakout over 40, I mean, it's just been a huge update or up month for silver, up about 17.25. Let's talk about how to trade it right now, though. Beautiful pullback today. This is exactly what we're looking at. I mean, this is what we want. Now, unfortunately, we're a little bit late to the party, but that's okay. We still may get enough down action to get us into this thing. So what do you got right here? This would be where I would begin my Fibonacci's. This spike low, this sort of double bottom down here. You'll notice that these are all a series of higher lows. What does that mean? It means it's an uptrend. So right there, spike low. We're going to go ahead and hit that. You can see right there's your key level, right around 44.90. I would be bidding pullbacks here until proven otherwise. I mean, it's a very, very bullish market. The biggest challenge for us is going to be just being patient enough to wait to get our level. Right now, would you buy right now? You'll probably be okay. I mean, honestly, you'll probably be all right, but you want to wait for a bargain here. You don't want to just dive in because potentially life could get really choppy up in here in front of 50. I want to see a nice pullback so we can actually get in with a little bit of value. Now, let's go ahead and take a look at the 4-hour chart and see if we've got anything here. 4-hour chart's a little bit more difficult. You'll notice right in here, you sort of have that nice big break, and then the market really flatlined, and then you got the big sell-off of almost 2% in 4 hours. Boom, during that U.S. overnight, and now we're sort of on the comeback trail. I would really steer clear of a chart like this. The reason why is there's the run, then we sort of went sideways, and then we broke, and now we're probably going to go sideways again. We want to see price creep down a little bit and get us involved at our level somewhere right around 44.93. If you wanted to buy maybe 45, yeah, I could probably sign off on that too. You want to be aggressive to the bull here, but you got to wait for your levels. That's absolutely huge, absolutely key. All right, let's see. All right, let's look at gold. Yeah, gold on the 1-hour chart. That was the question. All right, our gold analytics were straightforward. I mean, we didn't do really anything to reinvent the wheel. I did put this out earlier on our video that dropped a few hours ago on Switch Markets. You can see right here, what do you have? Very, very basic stuff. We got the natural resistance. That was the trade idea from yesterday. You've also got an extreme bullish bias. There's no question about that in my mind. The thing that I would really point out, though, is the 1 through 5 Elliott wave formation that is here. Now, remember, there's a couple different ways to do Elliott wave. You can take this thing as difficult or as simple as you want. We had a trader that drops by the room from time to time, is an Elliott wave expert. Goes into much more detail and much more depth than I do. I keep it easy because my own personal strategy is built on fractals and Fibonacci's. So when I'm thinking Elliott waves, I'm just looking for pullbacks. Basically, that's all I care about is pullbacks, but the extension part of it is a very big deal. And always remember, when you're working a 5-wave setup or a 5-wave progression, 1, 2, 3, 4, 5, okay? 1s, 3s, and 5s are movers, 2s and 4s are retracements. So right here, 1, there's your move. 2, there's your retracement. 3, there's your move. 4, retracement, small one here. 5, now we're off to the races. I think this 5 count takes us all the way to 4,000. So what do you want to trade right now? Well, I want to trade a pullback. I want to buy any reason to buy gold right now, I think is a fantastic idea. So what could we do? Daily chart. So we got a little bit of a pullback off the high today. $37.79, $37.80. It's not bad. It's not bad at all. I think that if you do get that pullback right there, fantastic area. And, even if you wanted to be more patient, maybe we do get a pullback. I mean, markets don't move in straight lines. You have to love this down in here. This order block right in this zone, this order block in its proximity to the golden zone, that's fantastic stuff. 37.25. Yeah. Do you get it from here? Probably not. Probably not. We are way up the queue at this point. One thing I would want to check, though, is I want to go that 920. Let's go ahead and throw that on gold. See, it takes our code a minute to work. Very bullish going back to the 19th of September. What do you have? You're still bullish. Bullish, 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 and really there's no entries coming. You're either long or you're not, and we'll have to wait potentially to take a short if that 9 crosses under the 20. I don't know that it will. Okay, so the question was on 1-hour time frame. So let's go ahead and check out the 1-hour time frame, and can we go short on this market? The idea here, I'm guessing, is right up here is going to be sort of your order block, your value area, your all-time highs, correct? So the idea is, do you want to short? I believe the entry was, what was it, 64? Let me see. What about the 38.62 supply zone? 38.62. Yeah, okay. So 38.62 supply zone on the hour 1, the XE huge bull, imbalance 2, last resistance. The last resistance, but is it really resistance? On a 1 hour, we could make the argument, yeah, you can take the trade. Here's what I would look to do. I'd throw some fibbies on there, and see exactly what we're dealing with. Okay, so right there is going to be sort of what I would call my last stand, 78%. So we break above 38.55. Odds are you're going to take out that top. More than likely, you're going to go to 38.75. It looks like sellers dug in at 38.72, which is just in front of 38.75. If I was trading this, I don't necessarily mind your idea, Universal. I don't mind it at all. I mean, I can see exactly what you're shooting for. That area right there is going to sort of be what you think's the top, and you're going to see some sellers dig in before we make a new all-time high. We don't really have any market drivers out this afternoon. I believe Trump's going to be speaking, so you better watch yourself there. But maybe government shutdown news could be big. The biggest thing I would say, watch your risk. Watch your risk. So if you were going to put your stop loss in, I imagine it'll be right above that swing high somewhere. But take a good look at what else is up there. 38.75. You could put your stop loss above that 38.75 zone and probably be in pretty good shape it'll give you a better chance to get your rotation back down into this area here, 38.50. So the question for me on your 38.62 entry is, are we more likely to go to 38.75 or back down to 38.50 from that level? To me, I genuinely don't know. I don't mind the idea, though. And the reason why I don't mind it is you've got a hard out. You know exactly where you have to get out of this market. If, in fact, this thing breaks above that all-time high, get out. Get out. Don't wait around. Get out. That's for sure. Let me see. Scalp type stop loss at the break even after 30 pips move. That's how I do it. Yeah, there's no problem with that. As long as you've got a real strong plan for getting out of this thing, I like it. Let me see. Andy Tong, how do you work out lot size? I'm just a starter with a live account with only $500. I've only been trading with prop firms with 100K, so huge differences. Yeah. I mean, it's an absolute monster. So what you would want to do, Andy, to work out your proper lot size is you would come in and you do something like this. Let's see if I can just show you a quick example here. So, in essence, you'd see right here your tick value. Everything I do is based on tick value. So I don't really worry about the trade value or the applied leverage. I work on tick value. So let's say you had a $500 account, all right, and your stop loss was going to be where? Let's say you're going to use a 50 tick stop loss. You're going to have to dial that 50 ticks in, 1 to 3% of your account. If you have a $500 account, you probably use 5%. Just be aware that 3 or 4 losers in a row is really going to dent your account. But let's say you were going to use 5% as a risk. What's 5% of 500? Let's go 0.05 times 500. I'm sorry, guys. It's early. I should know that. $25. So you'd have a $25 risk on the trade. So your pip value is going to tell you exactly what your lot size has to be. So let's say if we have a $500 account, 5% of that we can risk $25. That $25 has to cover your stop loss. So if you've got, say, a 25 pip stop loss, then you can go $1 a point. So if you were going to go $1 a point, your tick value would need to be what? Okay, so right there, that would tell us on this gold, for instance, that would be 100 units, and you'd be playing for $1 a tick. That's how I do it. And that comes from futures trading for a long time. I don't really think in terms of percentages. Most Forex traders think in terms of percentages. Okay, I'm looking to get 5, 10, 20% or whatever. And I think in terms of money. So I'm saying, okay, I got $500 to work with. I know my tick value has to be what to service my 5% risk. 5% risk of 500 is $25. If I have let's say, just to make it easy, we have a 25 pip risk. So if I'm gonna risk 25 pips off the beginning, I know I can only go about $1 a pip to satisfy my aggregate risk, which is 5%, and then also give myself that chance, that stop loss, that opportunity to actually catch a runner here and make a little bit of money. That's how I do it, Andy. A lot of folks don't. There's lot size calculators you can use that are relatively straightforward. There's one actually on the front of Switch Markets. So check that out. It's under resources. There's a lot size calculator there where you can just dial up, whatever you're trading. It's going to give you a different lot size, something like that. Let me see. Hurst Horns. Good morning, Shane. I never know which stream to join when there's 3. Yeah, it's one of these. I don't know. Join the Switch Markets one, whichever. We're on Switch Markets, How to Trade Calm, and Forex Signals TV. Feel free, if you're on Forex Signals or How to Trade, to migrate over to Switch Markets. If you do that, you're going to get our exclusive webinar on Thursday, which is the 5/8/13 EMA crossover. We're going to be scalping that live. Can't wait. It's always a lot of fun. Take your pick. Yeah, Switch Markets. Go over there and subscribe if you want. Let me see. Brian Laurel, check the US 30 orb. Okay, so there's going to be your break. Now, what happened to us? Did we get an entry? No. Why didn't we get an entry? Because this market broke. That right there wasn't good enough. We needed a close outside. So right here, you're going to have a close outside on your orb. Okay? Now you'll notice that we already went to that overnight low and checked it out. So what else do we got going? Now we're starting to get into maybe last week's levels. So as far as I'm concerned, you have to use your smart money concepts now, your order blocks, your liquidity sweep stuff. You probably would need to be shooting for that area right there. What's being challenged? This zone right here is already out. So, Shane, how would you trade it? I'd say you probably wouldn't. Frustrating, isn't it? Now, let's be smart here and break this down. Thanks for bringing that to my attention there, Hurst. Brian. Thanks, Brian. This thing broke, and it didn't give us our entry. That's the kind of thing that'll really piss you off if you're sitting here for weeks waiting to get a trade. That's the truth. Right now, if you're waiting on that bearish orb to set up, you're angry. I would be angry. Don't get angry. We made a video on how to improve your entries on your orb. Now, just because you got this initial break doesn't mean that you can't get in on the bearish trend. Is this market trending just yet? I would say no, but it has broken. All right? What could we do? We gave you two ways to do it. Number one, we gave you the 50% way. Wait for a check of 50% of your orb and then go short. You could do that. What else could you do? You go with Fibonacci's right from your swing low there. In this instance, you would target a Fibonacci retracement inside of the orb. 62%, 46,280. Are those trades the best? No. Did you miss the break? Yeah. Was there anything we could do about it? No. We always remember, guys, that hindsight is 20/20. And to sit around and be angry because the thing broke without us, I've been there. It's hard when you're sitting around being patient, waiting for trade setups. You got a good feeling about something, and then it breaks, goes right down to our key level, and now bounces up. What's the answer? Don't chase it. Don't chase it. Wait. Wait for a better entry. That's where the discipline comes in. If you have that discipline, you can trade something like the orb successfully. Just remember, when the thing breaks against you, when it goes and you get the move you're looking for, but it happens without you, don't panic. Say, okay, now I'm just going to switch on my Fibonacci's, or I'm going to go to my 50%, and I'm going to wait for this thing to come back to me. If the market comes back to me, then I'm going to take that trade. That's all there is to it, really. US 500, what do you have in the US 500? A much different animal, don't you? You have hard rotation. So maybe if you're looking at the US 30 saying, okay, I missed the boat, maybe now you click over to the US 500 and go, yeah, maybe I'll watch this one. Maybe you can look at the US 100, the NASDAQ. You know, it's really just about being flexible with your thinking, not getting too impatient and not chasing price. If you can do that, you can trade well, and it's easier. Hey, listen, it's easier said than done. I've chased price. I've got in there and clicked the mouse so many times in a day that, I look up and I go, Jesus, Shane, you traded 50 trades today. Do you know how big the commissions get when you trade that much, especially if you're trading futures? It's not worth doing. All right, let me see. Hurst Horns, that webinar sounds cool. So Wednesday on Switch Markets. It's going to be Thursday on Switch Markets, the Switch Markets TV. It's already scheduled in, so just go on over to Switch Markets. Check it out. It'll give you the time and the place. It's like 1 p.m. Eastern over on Switch, and we're going to go 5/8/13 scalping. It'll be good. I find with the orb, the first break is usually false. There's nothing wrong with that assertion at all. I mean, you could see that you broke right here. I mean, I could easily see this thing pulling back. Big picture, the Dow is only off about 168 points, which a lot of people go, oh, it's off 168. It means nothing when the thing's valued at 46,000. It's a tiny move. It's 0.25%. It's a 1/3%. Don't even worry about that. The pullback right up here would be, okay, the market is now even. Then you can get your trade. Now, what I'm saying is on your pullback, Is this market as likely to be that big breakaway trade winner? No, it's not. You know that if you pull back to 62%, the down pressure may still be valid, but it doesn't necessarily mean that you're going to be in for that big trend day down that you may be in for right now. I mean, let's be honest. This market could keep trending and just absolutely the bottom fall out of it. Could happen. But if you get this pullback, is it likely that you're going to get that big bearish move late in the day? Not necessarily, but look what you can do with your profit target. Man, let's say you get an entry right there, your stop loss, you bring your stop loss right down into here maybe, or maybe right down in here even tighter. Look at what you've got. You've got a 1 to 2 maybe, a 1 to 1.5, and nothing has to happen. All price has to do is just trade down and maybe challenge the bottom quartile of the U.S. range. That's doable. I mean, that's just a function of rotation. These are sort of advanced strategies here, but that's what I would be looking at doing here. Biggest thing is don't panic when that trade goes. Don't panic. Oh, I missed it. Damn it. Don't panic. It'll come around. Let me see. Yeah, Andy, I can go back over the Great Britain Pound USD. We just hit on it a minute ago. I got a level that I'm watching. You like a 1 hour short? I'll pull up a 1 hour chart on it. JC, since Switch Markets isn't in the U.S., how can we watch your videos there? Yeah, it's just on YouTube, JC. So you go to the Switch Markets YouTube channel and just click there. Yeah, everybody can watch that. Doesn't matter where you're from there. So you just go to Switch Markets on YouTube, and it'll be there. It's not inside of the Switch portal. It's on the Switch Markets TV, and it's open to the public too. So as long as you've got the address and know when it's going, just head over to Switch, and you can watch it. You're welcome. Everybody's welcome there. All right, 1 hour short. Great Britain Pound USD 1 hour short. Let's have a look. Looks like this gold trade's coming in. Coming right up there. Interesting. I'll be watching that. Universal. All right, Great Britain Pound USD, 1 hour chart. Okay, we're trading at a key level right now. That's our 62% daily retracement. This is the one that I sort of just went over. This is the bread and butter of, sort of what I like to do is take these long-term levels and trade them on short time frames. So if you're, if you're on the Great Britain Pound USD right now, understand that 134.50, that zone, that 134.54 to 134.50, that is the 10,000 pound elephant in the room. Now, yesterday's high, you definitely want to be aware of that. Key level, 134.57. It looks to me like the pressure's on that zone. If it does, in fact, break out, it's going to break high. Now, if you wanted to be short, I don't have a problem with it. The biggest thing you have to do is understand your risk. So right here, sort of there was yesterday's high. It came across the board. What would you be looking at as being a potential break zone where you have to get out? That high is right up there at 134.57. So if price does break above that zone, you need to be thinking about exiting stage left. You really do. So if we break high, we get above that area, yesterday's high, and we've broken above 62%, odds are you're going to go up and check out our other level, which is a very, very strong sell in my book. So if you're selling from right here, I don't mind it. It's not a bad trade, and it's not a bad trade at all because you've got a key level. You've got yesterday's high. There are sellers there. What do you want to get out of it? You're looking for a retracement, maybe back down to 41, something like that. Would you have a 52 sell, I believe? Something like that. So if you're short from here, I would say cautiously, because it does look like we're going to break higher. And once that level's gone, once that 62% level's gone, this market's going to go high. It's going to break above yesterday's high, and it's going to rotate. I would be willing to bet that it rotates right up to our 134.80-ish level. So if you're short, I mean, here it goes right now. So I wouldn't be short here. But I can't tell you what to do. If you want to do it, do it. My technicals say that no. Look at the compression. There's no question about key levels. We talk a lot about key levels, but there's just no question about it. You're high right there, 134.57. You're high right there, 134.57. I mean, you're having a fight right there at yesterday's high. We're trying to deviate. We're trying to take out 62%. Once that level's gone, you're going higher. There's no question about it. Is that level gone? It looks to me like it's leaving town. So if you want to short, be careful. For me, I'm content waiting for my short up a little bit higher. I have no problem sitting here waiting. That's what the whole game is. That's why we've got 50 markets over here. That's for sure. That zone right up there, 134.75 to 135 is a big deal. That's the area I would probably be looking to short. 13-period EMA at 134.75. That's a potential short. If you want to be patient, just 134, 87-ish maybe. That's pretty good stuff up there as well. Interesting. Okay, one last thing we do need to look at. I forgot all about it, but we do need to take a look at U.S. oil. U.S. oil was one of those that I put a trade idea out a while ago, and it's gaining more and more relevance. I'll cover it again tomorrow because I want to see what the EIA figures have to say first. But this is interesting to me. Very, very interesting. What you've got here on U.S. oil is you've got a potential low. You've got last month's low right there at 61.45. You've also got this month basically trading inside of last month. So we're pretty much to the end of the month. Something's got to give. Are we going to take out that low and run, or are we going to trade inside? If we trade inside and we don't take out that zone at 61.45, I'm looking for a significant break beneath $60. I've been calling for that for a while. I think you get it. Setting up beautifully. Our breakout trade, I'll recap that tomorrow. I issued that one last week, a trade idea, but man, I really like that one. And I think we've got a pretty good chance to you can see the breakout developing. 61.45-ish. We've tested. Do we break? Yeah, I think so. But we got to get there first. We're still trading at 62.25. We could rotate higher from here, off about a 1.5% today in U.S. oil. I think it's a breaker. I really do. I'd love to see this thing trade inside for the rest of September and then start off October and get that real sweet breakout in October beneath the previous month's low. That's a high probability trade, especially on the futures markets, but we'll see what happens. We just don't really know yet. All right, guys, I've droned on long enough this morning. I want to thank y'all for joining me. I'm at a special time. Let me see. Universal. Yeah, me too. Patience is the key. Even if I lose, I am risk managed. Probabilities good there. Let's see. Yeah, I mean, hey, that's all anybody can ask out of traders. I mean, if we were in a trading room right now and we were all either working for the same firm or you were working for me or I was working for you, the only thing you ask out of your traders is accountability. And accountability is risk management. If you don't have risk management, you're not being accountable to your strategy. You're not being accountable to your money. Be accountable to your money, value it. Because there's an old saying, when the money's gone, it's time to move on. And if you lose all your money in this game, you're not going to be trading. You can't trade without money. Don't lose all your money. At least hold some of your money back so you have it to trade. If you want to trade, you're going to need money. Now, if you're in a prop firm, it's a little different because the prop firm environment now, there's so much money flying around and they will fund you if you pass the evaluations. I say, if you're going to be aggressive and you want to be a riverboat gambler and a gunslinger, do it with their money. Don't do it with your money. If you're serious about trading, we had a great question about a $500 account. That's fantastic. There's nothing wrong with a $500 account. Just be accountable to your 500. I know. I mean, when I outline the per pip value of a 5% risk, it's only $25. It's not enough to make a living with, but it's enough to learn how the market moves. You know, you're not probably going to get emotionally attached to $25, but you need to be accountable to it because of the old saying, at least how I was taught. And this is no kidding from my mentor. He sat me down. I was trading a small account. It was like $3,000 or something. And I wasn't really excited about it. I was like, I don't know how I'm ever going to make any money doing this. And the answer was, if you can make pennies, you can make dollars. So he wanted to see if I could make money with a small account before we started talking about the 25s, the 50s, the 100s, the $250,000 accounts. That's what it was all about. Was no, you need to establish that you need to show me you can make money on a small account, and then you move up. So even if you're trading a $500 account and you're trading $25 a trade, or you're trading a $50 account and you're trading 25 cents a trade, whatever, get that consistency down, establish that consistency, and then level up. It can really help you. Hey, listen, it beats going in there with your life savings and losing your life savings as you're just getting the ropes of real money trading. Trading your own account with real money is a lot different than trading prop money. It's a lot different. So I like it, though. Guys, I like it. All right, guys. All right. I appreciate how calm and cool you are. I don't know about that, Hurst. You should have seen me. You should have seen me Saturday when my Grizzlies were playing Idaho. I was not calm and cool. We got ahead early, but they started to make a run on us, and we were going crazy in the stands. So I'm calm and cool at certain points, but at other points, I'm just a rabid football fan. That can happen too. Did I miss you analyzing the NAS? No, I didn't analyze it today. We put it out. Just head on over to Switch Markets. I didn't talk about 25,000. I did yesterday. All right, well, let's do the NASDAQ real quick, and then we'll call it. US 100, essentially what this is the $25,000 level. The NASDAQ, that's the deal, 25,000. Right now we're rallying up to about 24,599. We've got sells. I have no problem selling in front of this one. Now, this is different than silver because you're already making all-time highs. You're probably not going to get compression and a break. Not going to get a clean break over 25,000, at least in my opinion, you won't. So 24.925, I think we're looking to sell up there, looking to get a bit of a pullback there. But to me, that's the whole game. If you want to buy, I have no problem with you buying. Just you got to get some sort of retracement zone or an area where you can really hit it. And you'll notice that right in here, a little bit choppy. We can go to the US 100 here. A little bit choppy. Maybe a pullback to your 13-period EMA, which is 24,367. Now, if you want to remember, if you're in the United States and you want to trade your NASDAQ, you got to go to your E-mini NASDAQ futures, which are right here, and I believe we're trading D's. Same basic chart. Prices are a little different. Shane, what about 25,000? I go, it's already gone. Why is it already gone? Because it's a futures contract. Very important to understand that. Futures pricing, we price what we believe is going to be the case in the future. We don't price it what it is today. What's the NASDAQ index pricing? It's pricing tech as it is today. So this right here, that's double top, sort of proves our point, doesn't it? 25.27, 25.26, big pullback there. Then we go right back up to 25. There's no question in my mind 25 is going to be just a heck of a battle. Cash markets are getting to 25. Your CFD markets are getting to 25. The futures markets, the D's futures, they're already at 25. So are we going to 25? Yes, we are. What happens at 25? I don't know. All right, guys. I'm gonna go ahead and sign off. A one-man army, Universal. You're too kind. You're welcome, Andy. Absolutely. You guys have a fantastic session. Hurst Horns. Yeah, I like trading the MNQ. A great way to manage risk with those micro futures. Yeah, dial in your risk any way that you want. Dial in your risk. We call that granularity. When you're dialing in your position size using a micro and you're trading for whatever it is, 50 cents a tick or $1 a tick. And listen, it doesn't sound like much, but when you actually sit there and trade the E-mini NASDAQ, that volatility in that thing is so active that if you're playing for $1 a tick, you can still make a lot of money. You can still make a lot of money trading that thing. All right, everybody, I'm out. That's enough. I've gone about an hour. Fantastic session, guys. Thanks for joining me today. Remember, Switch Markets will have the webinar on Thursday, but we're back tomorrow with a trading psychology workshop and live trader Q&A. That's what we've got scheduled for tomorrow here on the trading room. So if you have any questions at all, any questions you want to ask me, anything, bring it and ask, and I will be sure to answer it. We've also got some key economic events that we'll cover tomorrow, and we'll be looking, take a more in-depth look at the crude oil market. I know I've been glancing over it, but I think our breakout's brewing. That's a wrap. Have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.